Yo guys, welcome to the new video. In this video, I will show you how the market makers will enlarge liquidity and increase the liquidity pools by trapping the retailers and smart money people in the market. Now I will show you how the liquidity traps work, and I will also show you on which phase the liquidity trap is in the currently in the market. I will show you the basics of how the phases in the liquidity will work on the liquidity cycle, because it's only the kind of thing I offer for the mentorship students. If you want to really know about the liquidity cycle, just comment below. I will get you in the mentorship group. Yep. Yeah. As in the earlier video I discussed, right, the market moves from liquidity to the liquidity. If you didn't watch that video, please go and watch that video. How the market moves using the liquidity. This is the buy side liquidity, so the market went lower. So in this time the market is in phase 1 of the liquidity cycle. Phase 1 liquidity cycle it is, and we should wait for the phase 2 of the liquidity. Can you see, after it was taken there is a huge push. This is phase 2 of the liquidity cycle. Phase 2 of the liquidity cycle. Can you see the phase 3? This is phase 3 of the liquidity cycle. This is how the liquidity expands in the market. Can you see? There will be total 3 phases in the liquidity expansion in the market, and I won't show you the entry patterns here. I should show the entry patterns to the mentorship students only. I will show you the context behind the trades we take in the mentorship on the regular basis. These are very high probable trades which occur 90% of the time. See, same thing happened. According to the strategy of the sell side liquidity taken, we will be from buys here. Again the same thing. Again the cycle has formed. This is liquidity cycle phase 1. This is liquidity cycle phase 2, and this will be liquidity cycle phase 3. Yeah, same thing. This will be liquidity cycle phase 1. This will be liquidity cycle phase 2. Let me annotate it quick for you, the liquidity phases, so it will be not confusing for you. And I will also explain why this liquidity buildups will be happening in the markets by the market maker. Liquidity phase 1 here, right? Liquidity, let me copy this. Yep. And here the liquidity phase 2, right? This is here liquidity phase 2, and here this is liquidity phase 1, right? Yep. And here the liquidity phase 2, and here the liquidity phase 3, right? We should mark each and everything in the market so we can know at which liquidity phase we are in the currently. At every liquidity phase there will be complete reversal in the market, so that's why we should get better at viewing the liquidity phases in the market. Again the liquidity cycle starts again here. Can you see? Liquidity phase 1, liquidity phase 2, liquidity phase 3. Can you see how easy it is? If you know the liquidity cycles, we can get all these cells, this cell, this cell, this cell. This is how efficient the liquidity cycle works in the market. Again here, can you see the liquidity cycle again? SP1, SP2. If in the future the price came here, there will be very good sell, at least 200 to 300 pips, because it's a daily time frame, right? This is how we understand the liquidity cycle concept, by understanding at which phase we are currently in the liquidity cycle of the market. It is phase 1 of the liquidity cycle. Boom, the market took buy side liquidity, boom. Again at the phase 2 of the liquidity cycle, the market took the buy side liquidity, boom. At the phase 3 of the liquidity cycle, the market again took the buy side liquidity, boom. You can ask where we should target. We should target the sell side liquidity or structural liquidity, right? We should always target the structural liquidity, boom. Or this is the last final target for this. Can you see? This is phase 1. Can you see the good reaction? We can target this liquidity. After this liquidity, we should target this liquidity. This is how we pray from the liquidity standpoint to liquidity standpoint. We avoid these days completely. These days are nonsense. Can you see? We should only trade the high probable trades in the trading. We should avoid the other days at all cost. This is what and how to win in the game of trading. Same thing. Liquidity phase 1, liquidity phase 2. Can you see the market reversal after taking the smart money people and the retailers? Smart money people will buy from here and the retailers will buy here and the stop loss will be here. Both are done. They are smashed. Stop loss hit and the real move happened here. This is how the exact scenario how the market maker will manipulate the traders like this. They will move in accumulation, manipulation, distribution. This is how the market moves. The real cycles. These are the cycles how the market moves. Buy side liquidity taken, sell side liquidity taken, done. Again, these liquidity phase occurs at every phase 1, phase 2. Again, phase 1, phase 2, boom. Can you see after the phase 2 liquidation? Can you see the huge move? Huge move. Can you see here again? Phase 1, huge move. See here, phase 1. Liquidity cycle again started. We should wait patiently to get these trades occur. We should wait patiently to get the liquidity phase cycles to occur. Phase 1 liquidity, phase 2 liquidity, boom. Again the cycle starts here. Phase 1 liquidity taken, boom. We got a nice reaction at least 100 pips. Again the cycle started here. Phase 1 liquidity taken, boom. Structural phase 1, liquidity phase 2, liquidity phase 3. Can you see after the liquidity phase 3 how much good reaction it is? Again the cycle started here. Here SP1, SP2, SP3. See after the third liquidity grab, can you see the huge reaction to the downside? This is what we want in the market. These are the very high probability moves in the market. If you grab these type of moves, we can be very extremely profitable in the markets. Extremely profitable. We can win as many as funded challenges and funding accounts. We can grab everything. Huge moves. This is the way to capture the huge moves in the market. This is how the top 0.1% trade in the markets. Yo guys, I am showing the stuff. If you really want to get profitable in the markets, the stuff is here, bro. You should just put your ass off and work hard to get this. Watch this video 100 times, 1,000 times to understand this stuff. These stuff get you food, bro. Don't waste it. Don't waste it. These videos is gym. And apart from the trading strategy, I always tell the psychology is also very important in the market. You should keep your emotions in control while trading. You should do cognitive thinking. Cognitive thinking means keeping your emotions in control by changing your thoughts or altering your thoughts. Because the thoughts produce emotions. The thought produce feeling and feeling produce emotions. And the emotion make you to do revenge trade or fear or doubt in the markets. That type of behavior is not for trading. The trading is about the law of probabilities. It works on law of probabilities. Every trade you took in the market is just a guess according to you. The market don't know about the strategy you are working with. It only works on the law of probabilities and order flow. So Risk management is the key in the market to stay safe. Yeah, we will discuss about the psychology on the next video. Until then, peace, guys. Have a good trading week. Bye.